Hi, Brett Hetherington. I thought I'd spend a few minutes today talking about 5 ways to help you create wealth. Okay, so the first way to create wealth is to actually spend less than what you earn. Makes a lot of sense. Haven't met a person yet that really can create wealth without actually sort of being able to save. I suppose the issue for a lot of families out there and a lot of businesses at the moment, it's difficult enough to actually earn enough income to cover all your expenses. Nevertheless, saving some money is better than not saving any money at all. And I actually sort of give the example around the fact that if you were able to save $40 a week over 40 years and you're able to achieve an 8% return over that period of time, you will have actually accumulated $581,944. So hopefully that just gives you an idea of what the benefit would be to actually save a small amount of money every week over a longer period of time. My second way to help create wealth is to understand the principle of compounding interest. If I was to take $10,000 at 4%, after the first year it would be $10,400. Then if I was to take that amount and compound it again at another 4%, at the end of the second year it actually would be $10,816. So the whole idea of compounding interest is that you're building on what you've already created, and that through the interest that you've earned the year before. By maintaining the investment and continuing to grow it, and it's actually going to grow faster for you. Just want to briefly point out though, with my first way of creating wealth and my second, I haven't included any tax implications in those particular ways or strategies and that to help you create wealth. Okay, let's look at the third way. Look for an environment to create wealth and minimise tax. Perhaps you're running a business and it might be an avenue and that of looking at the way that the business is structured, which in turn minimises tax, which actually provides you an extra disposable income or a surplus in that you might be able to use from an investment point of view. I'm one for superannuation as a vehicle to be able to help you minimise tax, and definitely an environment in that's great for creating wealth. If we're looking at the individual, we'd be looking at the benefits of franking credits coming from shares, depreciation with regards to investment properties. So I suppose, summarising my third way to create wealth, ultimately in that you're actually looking at structures and investments in that to help you create your wealth. So my fourth way of actually helping you to create wealth works on the fact that taking those surplus funds, being able to put them into a home loan offset account, reduce the interest that you're being paid on your home loan, which is not tax deductible generally, and then on the back of that, reduce the term of your loan, helping you create more equity in your house, and ultimately it's another way of creating wealth. Okay, number 5. Well, realistically, my number 5 is essentially any combination of the first 4 that we've talked about. It could be a combination of the ability to learn how to save through budgeting, looking at the way that you structure your investments, looking at the way that you actually structure your business. Is there any capacity in that to minimise tax, to be able to create any surplus income out of that? So number 5, combination of any of the first 4 that I talked about. So let's just have a quick summary. It was a very brief session today. 1, savings. Haven't met anyone yet that's been able to create wealth in that from the inability to save. If you're spending more than what you earn, then ultimately you're not going forwards, you're actually sort of like going backwards. 2nd, understand the principle of compounding interest, helping you earn interest on top of interest, and your investment will grow faster. The 3rd one that we looked at was very much a situation of, if you're a business owner, what structure do you operate your business through? Do you have any tax advantages around there? Minimising tax, creating wealth, looking at superannuation as a retirement tool, as a tax effective environment, trying to work all of those and that to your advantage. So the 4th one was taking surplus savings, putting it into a home loan offset account, reduce the interest on your home loan, which is not tax deductible. Also looking at the fact that you'll reduce the term of your loan. From that, ultimately you'll be building more equity into your house, and that's another way of creating wealth. And of course the 5th way, the last way, was any combination of the first 4 that we talked about previously. I hope you have a great day. Thanks very much for your time.